Can you sort of describe, I suppose, briefly how you even get to the steps of a financial agreement and how a tax debt can really affect the position if it's not dealt with, if it's non-compliant, or if there's still a huge amount of interest and penalties?
Yeah, absolutely. When people go through a financial separation, all of their assets are taken into account. That is both good assets, houses, cars, all of those sort of positive things, but as well as all their liabilities. And if they have businesses as well, their businesses are obviously taken into account, and obviously any debt or tax associated with those businesses as well. And then you get an overall usual net position of the asset pool, and then that's what's available for division between the parties. Okay, so when you're looking at that global pool, you have everything in there from the equity in the house to bank accounts to shares to all of those sort of things, and then obviously you include in that as well all the liabilities of the parties. So the mortgages, if there are outstanding tax debts, if there are other sort of liabilities in there as well. So that is really the opportunity at that stage before a deal has actually been crystallised for everybody to work together to get people like yourself involved, Olga, to try and maximise that property pool. It's always so important that when people do go through a separation, they keep as much money in their pocket as humanly possible. Obviously, separation is expensive, whether it's lawyers, whether it's paying for valuations, whether it's paying for everything else. If people can seek advantage through obviously maximising their financial position, they'd be mad not to. It really is such an important opportunity for people to maximise that pool. So the available division between the two of them as well. So they're both coming out winners from that situation.
And we've previously been working on a case together where you were able to sort of put a pause or not necessarily halt proceedings, but so you can get specialists involved to help maximise that. Can you sort of explain further what we were working on there?
Yeah, absolutely. So in those situations where you are involved in pre-court proceedings, for example, where there isn't an impending trial or anything like that, that's the best opportunity for people to actually resolve things amicably, sensibly, make sure, as I say, they maintain as much cash as possible in their own pockets. And that's obviously where we get Tax Assure involved, is to make sure that those clients at that stage can say, okay, we need proper specialist advice now. Everybody stop, let's go get that advice. Let's see how we can maximise this property pool as best possible, and then we look at the division after that. Because really the most important thing for me as a lawyer is that crystallised final property pool. So that's the actual assets, the net assets available for division between the parties in a proceeding. So that's what I really look at, to make sure we can make that net number as big as possible, so that the parties can walk away with as much cash in their own pocket as possible, and really just to be able to set them up for the next step in their lives.
Often when we're engaged in those circumstances, not always is it amicable, but we find both sets of family lawyers and both sides are usually very welcoming of us, because if we can stop further action and we can reduce the debt, as exactly what you said, it helps the pool for everybody involved. If someone starts amicably, but then it all doesn't go quite to plan, are you still able to jump in at that point? Is there a too late point for you?
No, absolutely not. I think the most important advice for anybody is that until they obviously do sign off on final orders, things can be done. Things can be paused if necessary, even if there are court proceedings coming up. The court does take a strong view that people are sometimes better off solving these things themselves and getting the best advice possible, because then it assists the court. Because if we're looking at a matter where we've got a trial coming up, we've got a business, so I'm for the non-business owner who says, oh, I've got $1 million worth of debt, and they're saying the property pool should be reduced by $1 million because of that debt. I'd go, well, hold on. Let's get some specialist advice on that. See if that million can become 700,000. See if it is a real million. See what we can actually work towards to actually see if we can maximise that pool further. It's certainly a bit more of a battle in those sort of situations where somebody is trying to amplify debt levels, so the other party doesn't get as much. But that's obviously then the job as a lawyer to obviously represent our client to make sure that we are maximising that pool as much as possible, to make sure it's a realistic valuation and realistic net property pool that's available for division.
And we often see the other side of it. So often, I don't always talk about genders, but it's just sort of something interesting to note. We often have a lot of males come to us once a financial settlement has been sorted and once all those orders have been signed off on and the debt position wasn't taken into consideration. And now there's quite a lot of money that has to, again, I'm generalising, but needs to go to the other party. And so there's not the same level of funds. So while everyone was together, there were houses and there was cars and there was this nice net equity position. But after orders have been signed off on, say it's 70-30, money needs to be paid to the other side. side and there's a large debt involved, and people often come to us and don't know what to do with that debt. They don't have the same access to cash, and it's our job to buy them time. The last thing they need is more court action. I think people are exhausted after going through court. The stress of these things are so real, and the mental load of litigation is often not talked about.